It's a snoozer. All right, everybody, turn off your alarms. 187,000. That's a bit of a surprise because it comes in lower than anticipated and certainly down from the prior month's initial read. I'm waiting for the revisions to drop. Private payrolls up 172. That is down from the forecast of 180. It was only 149 last time, but interesting because the ADP number was so strong, and this compares with that. 49,000 jobs less in the revisions over the last 2 months. So that's going to be a shortage of jobs that will help the narrative that the labor market is slowing down. Unemployment, though, 3.5%. Falls from 3.6%. I'm going to guess that has to do with the labor force. We'll take a look. Average hourly earnings come in strong, 0.4 more than anticipated, leaves the year-over-year number at 4.4%, and average weekly hours drop by 1/10. So that is maybe a sign the economy is slowing a little bit. Labor force participation unchanged at 62.6, and the U6 number, the underemployment rate, 6.7%. The prior month of July was revised down to 185 from 209. So that's going to be the weakest in some time. And the change in private payrolls revised down to 128 from 149.
It's a downside surprise on payrolls, but wages come in a little hotter and unemployment drops to 3.5%.
Yeah, this is why the Fed is going to hold off and not look at one data point, because we've seen some numbers that suggest that maybe the labor market is getting a little bit looser, but then you look at the unemployment rate and you're looking at a problem for the Fed, because if that's what's driving up wages or keeping them higher, then they're not going to make the progress they want to make. They're looking at this as the labor market loosens, it's easier to find workers, and then we don't have to pay them as much. But it doesn't look like much has changed over the last month.
I look here, Mike, and it gets me back to Q4 of 2019. If I take out the gyrations of 2020, all the COVID emotion that was there, all of a sudden with the revision, 209 I believe is a revision, and then a sub 200 number, we're getting a feel like pre-COVID. Do you look at this as the first pre-COVID jobs report equivalency?
Yeah, that's an interesting point, Tom, because pre-COVID, we were still, 187,000 jobs is still a strong report. We would have said this is a strong report if we were looking at it in July of 2019. Because of the pandemic distortions, everything got blown up. So now we think, oh, this is the weakest since the pandemic, the weakest first print, but it's still reasonably strong.